In this video, let's discuss divergence trading strategy, how to properly trade divergence on your chart. Not only that, how to identify divergence and divergence trading confirmation. All of this in this video. Pay attention and watch this video all the way to the very end. Please consider supporting this channel by leaving a like for this video, subscribe right now, and turn on the bell notification for more forex videos like this one. Also check the channel for other forex content. We'll be discussing divergence trading strategy. So the first thing we want to look at is, what is divergence? Divergence is a technical analysis concept that occur when the price of an underlying asset move in the opposite direction of what technical indicator indicates. So what that means is, if price is moving upward, it means that the indicator will be moving downward or giving a sign that the market is going to come back down. And I'm going to show you that practically on the chart. Let's say, for example, if you look at USDJPY chart, and I am on the 1-day chart here, you discover that market is moving upward from this very point. Market is moving upward. But if you look at the indicator right here, which is the MACD indicator, market is sloping down. Okay, so this is a form of divergence. And if you look at this very indicator as well, which is the stochastic RSI indicator, you discover that market created a new high at this very point, and then on the indicator, market enter into overbought condition and then come out of overbought condition, could not enter into overbought again at this very area, but market still create a new high at this point. So you can say this is a divergence, which is very, very important. The next thing is, if you look at, there are indicators that are very important when considering divergence. So 3 indicators that are very important. 3. The first one is the MACD indicator. This is the best indicator for me that I use for my divergence identification. And the second one is the RSI, that is the relative strength index. So when you use the relative strength index or the MACD, they are better raw for me compared to the stochastic indicator. However, the third one is the stochastic indicator, which you can also use for your divergence confirmation or divergence trading. But if you want to get a really absolute good divergence, the first 2 is the best indicator to use for your divergence trading strategy. So I'll be using MACD and the stochastic for this very video. So the next thing is how to trade divergence. But before I dive into that, which we'll be looking at identifying divergence with indicator and divergence confirmation and trade execution. So the first thing is identifying divergence with indicator. So in this case, on USDJPY, I'll be using the MACD indicator. If you observe, this very market move upward. From this very point, market move upward, come back down a little bit for retracement, and then go up a little bit to create a new high. And then afterward, market begin to come back down a little bit. And right now, market is trading at this price level of 153.90. If you notice, market is moving upward. So if I use my trend line and draw from here upward, market is making higher highs. And then if you look at the indicator, because you have to connect 2 points. Let's say, for example, in this very case, MACD, market created this very histogram on the positive side of the MACD. And the next time we see that positive creation of histogram is at this very point, which was very little, okay, very little. And then if you connect this point from this exact point where we connect on the chart and this very area right here, and you connect right down, you discover that market is sloping downward. Okay, so this sloping means that the market on the indicator is coming down, but on the chart, which is a price action right here, market is moving to the upside, creating new highs. This is how to identify divergence, and this is what we call divergence in trading. Now, very importantly, this kind of divergence that occur at resistance on your price chart is called bearish divergence. Why? Because if markets break out after confirmation, market is going to come back down. And if you notice on this very price action, market has been moving all the way to the upside, which means market is going to come back to the downside for a bearish formation or for a bearish move all the way to the downside. So you have to understand that this kind of divergence that occur at resistance is a bearish divergence. So that means you'll be taking a trade for a sell position all the way downward if you want to trade this divergence after confirmation. And this is what you must have to understand about bearish divergence. The next thing is divergence confirmation. How do you confirm divergence on your chart? There are ways to confirm divergence on your chart. And the first one is breakout of trend line that is under the support of that very divergence. If you look at it right here, we can draw a support line on this very divergence. So from here, which is also a trend line to see, from this very point, and you draw from this very support to this other support, and you draw it out. Okay, so once there is a breakout of this very trend line, which is a support trend line, then it means that the market is going to come down and the confirmation is already in check. So you must check your divergence confirmation, which is very important. So right at this very point, divergence confirmation is already in play right now on USDJPY chart. And remember, I am using the MACD for this very divergence trading. So what I have to wait for right now is for the market to break out significantly. So once the market break out significantly, then it means that the market is going to come back all the way to the downside. And without this breakout of this very support trend line, it means that the divergence have not been confirmed. So we have to wait for that divergence to be confirmed by a breakout on this very trend line, which is super important. Another confirmation for your divergence that you need to put in check is that if you look at this very histogram, there was a formation right at this very point which formed this peak, and the market come back down, form on the negative side of the MACD at this very point, and afterward market begin to form again on the positive side. And then the next confirmation is that we want to see market started formation on the negative side after a formation on the positive side. Look at it here. Market form on the positive side, okay, which created a divergence at this very point, and then begin the confirmation again on the negative side, which is what we are seeing right here. So it is a sign that bearish momentum is going to come into the market very soon or immediately. And that is why we are seeing this very sign. So this is the second sign that you need to look out for when trading divergence as confirmation to your divergence trading. So this one and this is your confirmation before you take any trade on divergence. So this is very important. So divergence confirmation, the first one is your trend line, and the second one is your indicator they're using. In this very case, we're using the MACD indicator. Once the MACD histogram started formation on the negative side of the MACD, then it means that the divergence is already in check. And the last thing I want to talk about here is trade execution. After confirmation of every trade, the next step every trader take is execution. So how do you execute your trade right here? Once this is in check and you want to trade this divergence, for example, the most important thing you need to do is to plan your target, your stop loss, and your entry point. And what I personally do is to take my stop loss at the peak of where the market started dropping. That is the very highest high. In this very case, this very area, this is where my stop loss have to be. And then my entry will be within this very area after the breakout. So I assume my entry have to be within this very zone. And then my take profit target have to be 2 times my risk. That is from here to this area, have to come back all the way to the downside to this very point. So in this case, I can prefer using the short position too. So I will go right here and pick my short position too, and then I will put it right at this point as my entry, and I will adjust my stop loss a little bit to the downside, and then from here I can get my target 2 times my risk at this very point. So if you look at this very area, you discover that my risk is at this very point, okay, that is at the resistance. My entry is at this very point, and then my reward, which is my target, is at this very area. So the most important thing is that you must have to do your risk reward ratio very, very accurately. So this is the perfect place my stop loss should be, my entry, and my target. Like I said, I used to prefer doing 1 to 2 risk reward ratio. So you can see right here, the risk reward ratio right now is 1 to 2.23. So this is how you trade your divergence. For example, practically on this very USDJPY chart, this divergence is already in check, and we are waiting for the final confirmation, which is a breakout of this very level of important support. Once that breakout happens, the market is going to begin to come all the way to the downside, and my target is right here. Another thing that I do when the market begins to come all the way to the downside is, once I am in 50% profit, let's say for example I put back the short position to right at this very point, and then my stop loss right here, my take profit target around this very point. Once my trade is in 50% profit, that is market begin to move all the way down 50% profit, I immediately take my stop loss right here to break even, to be in the risk-free trade, which is very, very important. So if markets come back up, I will not be stopped out, and most time I take half profit from this very point as well. So this is how to trade divergence, and this is how you can execute your trade after confirmation. Please don't just trade any divergence without confirmation. Those confirmations are very, very important to a successful divergence trading, and this is what you must have to understand when it comes to divergence trading on your chart. And if you look at this very area as well, this very methodology, I do it on the 1-day chart, is also applicable on the 1 hour chart, 4 hours chart, and 1 week chart. But a quick note is that divergence on the higher time frame are stronger compared to divergence on the lower time frame. What that means is divergence you have on the 1 week chart is stronger than divergence you have on the 1 day, and divergence on 1 day is stronger than divergence on 4 hours, and it goes down like that. So if you see a divergence on 1 day, on 1 week, it means that that divergence will take a long time to play out, and it can play out for a very long time as well. So you can also use that as a prerequisite for your trading on the lower time frame if you discover a divergence on the higher time frame. And this is super important for all of us that trade divergence. Pay attention to all of these divergence trading trick. So in this video, I only cover divergence trading strategy for a bearish divergence all the way to the downside when market has moved upward, and this is very, very important. In my next video, I'll be talking about bullish divergence for market moving all the way to the upside. Please consider supporting this channel by leaving a like for this video right now, subscribe, and turn on the bell notification for more forex videos like this one. If you want to watch my other video, check right here and right at this very point for more divergence practice and trading. Thanks for watching.